Welcome to TradeTheNBI.com. This is John's report is for the 31st of March. Well, no shock here. We had our NBI white. We suggested that at this point, if they try to push towards 50, it wasn't going to happen. Even if they did, it was still going to be coming back because NBI white. So we were looking for a move to the 0%. And my question literally was, once we break, how fast does it go? And well, it was pretty quick. It could have taken a little bit longer, but once that selling starts, we always talk about this. Markets fall 66% faster than they rise. It hasn't changed, and that's just because there isn't enough room in the exit door relative to the slow filling of the room itself. And so you just can't get people out fast enough. And in this particular case, you saw how that goes. Now we're opening up and filling the expectation to the 0%. So right on target with that. Now, the question we had, though, really was whether or not the shakeout would be matching low, in this case, with a higher shakeout reading. And no, we're minus 18.9. The low in here was in the middle 1900, 19 point couple range, somewhere in between there, and then going back over here all the way down to minus 20 at the beginning of the breakdown. But so if it continues to fade even a little bit more, then you'll have a lower shakeout reading. That's not a divergence, and that would be congruent with a continuation within that. Now, continuation based on, well, do we still have a situation where the NBI white's leading? Yeah, but we're turning around. In this particular case, we're getting to not oversold because you still have to have a turnaround of the magenta for buy configuration to take place. So likewise, you've got orange caught between cyan and red. We talk about this over and over again. When you have that, you have continuation like we saw all the way through here. We had the slight potential build when that orange dipped down below, and then you had the fight that took place right here at the 23%, and we had the DOC spread. At the same time, you had the NBI white lead, and then orange magenta dipped below on the NBI reading. You can't fight that. It is what it is. It's always going to turn out the same way. It was clear from the NASDAQ's already broken that low, so that one was pretty darn clean, and we've seen that the NASDAQ is weaker. So all this is exactly what we would expect from the readings, and know why the pay bar's red. So despite all those back and forths, we're still in a zero range with treasuries, and this is the Fed not really knowing what to do with stagflation, and that's what you've got here because you still can't get oil to come down. And I told you that's the driver right there. As long as that remains where it is, you're in a transitionary period, and rightly so. The Trump administration has acknowledged that that's going to be the case. The stall tactics that have been implemented, though, are a problem, not to mention the fact that you're still spending at the same rates that Biden was. So there's no difference from that standpoint. Trying to save money within that, it's not going to be enough to have any real causality. From a euro standpoint, wow, they're still doing great. The euro, fantastic is to be in the euro, but at the end of the day, we know that is going to be coming all the way back down. It's just a question of when and how quickly they realize that relative to U.S. growth. And so this is the question. They think that U.S. growth is going to stop with tariffs and that, and we'll see if that's the case. It just doesn't make any sense. But they have a new economic world that they live in that somehow is absent reality. But you got to go with what is. And see, that's the other thing. You can have your opinion all you want. That doesn't make any difference. We trade what the readings are. From a gold standpoint, this is not unexpected. I mean, that's exactly what we thought was going to go and continue to rise, because at this particular stage, you still don't have any reason to suggest that you're not having debasement that's taking place. And as long as that's the case with deficits, and that you're still going to have the fade. Bitcoin still behaving relative to the NASDAQ, a little bit stronger, though, I mean, relatively speaking, but the effect is the same, and particularly when you have selling, people have to move out of these kinds of assets to cover positions they have in others. And sometimes that happens with gold, but we're seeing a divergence on that where gold is not impacted by that, which means that most of the flex money, gets put into the crypto, gets pulled out, and longer trade staying in gold. And so that's a bit of a divergence that we've seen, which not problematic. So from an intraday standpoint, the NBI white led the whole way. So you didn't even really get any major attempts back. Even just early at the beginning of the day, we had a couple of moves to the 23%, which when you have that and you then get an additional crossover, I mean, that's your opportunity to jump in. Sometimes, coming into a situation like this, you're thinking, oh my, it's already down, 30, 40, I can't just jump in. You can't. It's just a matter of looking for those punctuation moves where you're still riding up. And in this particular case, you can look at the DOC. When you dip back below the plus 13.5, that's your indication that you've got a little bit of stability before, and then it just cascades below. So it's just a matter of following the divergence right here, where you had this meet and then the rejection. Once you had the rejection, you knew there was going to be another round lower. It gets tougher when they're further apart, but you can see the spread that takes place, even where you had the beginning move right here, and then cyan tips up, green comes back down, and then you get your next wave. And so that's where that little pop took place, and then boom. And same situation every time you get the build. Where you get the compression is usually a sideways action. And you can see that develops right there. And then when you have the meeting point, even if it's close, it's a tough one, because from a program standpoint, it's very hard to, develop a tolerance range. But, when you're talking about relationships, and that's really what these are, they're a relationship factoring between each other. And when there's a rejection of it, that's a clear indication of lopsided momentum. And of course, you're going to have new indicators coming out for the month. Here we have the intraday of even tighter 5-minute, and it was never even a question. So much easier does it get than that? It's just like ugly if you're long, beautiful if you're short, because there really wasn't a whole lot to have to worry about. And here in the post European session right now, still unable to capture anything, and it's going to stay that way. So all in all, it's just a matter now of waiting for data and the new month starting, new fund money coming in, and where that money gets placed. Does it move into the commodity of gold or even oil and stay out of the market, or just sit on the sidelines? And we'll start to see how that develops. But from a reading standpoint at this particular stage, it's not great from a long standpoint, and it's one of those where you don't jump in until you have a signal. So you're not necessarily looking to catch the bottom, because there's no reason to. You wait until we have confirmation that there's actually some stability. So we just follow the trend with what it is. As always, though, you can look for the indicators coming out. They'll be out later today, and we'll start April Fools with some interesting stuff. As always, have a good one. Trade well.